So good evening or good day if you watch the recording at another time. Monday market analysis a bit later than usual due to a lot of stuff going on here. And just as a start picture, this is the zone I drew last week Monday in the MMA. That's got two fake outs above, but it's pretty much following that pattern. So very nice action there, but let's start for the usual. Quickly scanning the news sites. There's a lot of, obviously, Russia-Ukraine tensions, and I think that's a very nasty thing that, or at least it could get really nasty also for the stock markets. And it's about to be seen what Bitcoin reaction will do. Got a bit of double feeling about that, but we'll get to that. For the rest, some BlockFi paid 100 million settlement with the SEC. So they seem to be holding their ground there, paying some fines, but 100 million is not much for a company with those turnovers. And actually, something really interesting, outlook for Bitcoin that makes any sense. So I was pleasantly surprised about CNBC on that. Usually it's just garbage. And I'll drop the link in the channel if you want to read it later. But interestingly, it said that in the past, when there were geopolitical tensions, it did well. So it could do well again if this takes up, but the chance in the landscape, the different scale of investors coming on, might be following the stock market first before bouncing back much up. For the rest, pretty interesting, but I like the clothing part of this article. You have to look at the long-term perspective is adoption. That's all that matters. And that's the hype will jump the price up and down, but in the end, it's the adoption and the steady growth that's about it. So pretty interesting article, pretty good also for a mainstream financial news site. So pleasantly surprised about that. Quickly switching to the calendar, and this week there's pretty much one big thing. That's the Fed FOMC minutes, the meeting minutes on Wednesday evening EU time. And that's, I think, where everything will wait for. There are potentially two big market movers. One is that one, and the other one is if the Russia-Ukraine situation gets out of hand. And yeah, I really don't like what's going on there, pretty much. It could be like a bit of a black swan event for the stock markets. Well, the excuse to close the, to take the big correction in the stock markets, the excuse they have been waiting for. And it's already happening. You see that the stock market dropped when the US announced that they're closing the embassy in Kiev. So Wednesday evening, or if Russia Ukraine situation goes out of hand. Quickly looking at some economics. I don't know if you've seen this chart before. Debt to GDP in the US is still skyrocketing, and we far surpassed the World War II levels. So that's kind of crazy. Consumer sentiment is very low. Last time we were that low was in the dot-com bubble of 11 and the banking crisis in 8 and the 90s recession. So we're getting pretty close to recession levels there on consumer sentiment. Well, US central bank balance sheet still crawling up, and pretty much the same for the European area balance sheet. There have not been selling any of those assets yet. Inflation, obviously, this comes with a price. Inflation is sky high. It's highest level since, where were we there? In the 80s, the recession in the 80s there. So that's pretty grim overall. So next question is, what is the dollar doing with all this? It has been going up a bit today, and I think mainly because the Eurozone is more scared of what happens in Ukraine because it's much, much closer, and also EU is economically much more tied to Russia than US is. And that's a small upward move here in the DXY, but it is getting rejected at the top of this zone that's been here for bloody ever. That started in 19. It hit it pretty much perfectly, the top there. And I don't really see any big moves to the upside there yet. We are at count 4, so there is a bit more space to go sideways, maybe towards the 96.7-ish, but I doubt it will break the 97 there. So DXY, a bit of a bounce there. So far we did make a higher low, but also a lower high so far. So let's see what happens with that. As long as it's in this zone, it's pretty much doing nothing. Stock markets, we had a fake out, and then we dropped for real out of this descending resistance line, and above the, also below this ascending support line. So that was pretty darn good dip. We are landing now on a very critical support line that comes from summer 21 and the whole summer period. Also in August 21, also it kept down here, this zone here. So we're at pretty strong support level. But it's fragile. There's no big time frame trend down yet, but there's definitely not a big time frame trend up. We even double topped out on a critical resistance level. We double topped, and we're now having the straight reaction down, obviously. So it looks very fragile to me. It's not giving me a happy feeling if I look at these stock markets, and it doesn't need that much to get a bigger plunge down towards probably, what's the space here? Let's say at least, if we really continue down, there's at least, I think we're looking at the 15 to 26% correction there, at least on the SPX, on the SP 500. And that's pretty much for all the stock markets. So it's almost like inevitable at this point of time, and it just needs one trigger to take off, and the trigger could be the Fed with rate hikes, or balance sheet stopping off or slowing down with the quantitative easing. It could very well be the Russia-Ukraine situation that's been used as a scapegoat to crash the markets there. And the big question is, what will Bitcoin do then? But another interesting thing is you see that gold is breaking out here, and it's very nice looking chart. It broke out of this descending resistance, pretty solid breakout also. So far, keep in mind this is a weekly chart. And 0.73% is pretty solid for gold. It's a good move. And if we manage to break like that 1878, the previous high, then I think we're in for a very, very good run. Obviously, next move is 1900 to break, and then the next one is 2K. But we all weekly seen this huge cup and handle formation that has been a decade old. The target is still 2600 for gold. That's why I posted the channel. I took some small building positions in Vanek Junior Gold Miners and the iSilver Trust Fund. Just slowly building positions, because if things really go south, I expect those to start this next big move up there. Then my scribbly from end of January, so far perfectly on track, and my sentiment is still, I'm not euphoric. We did make a slightly higher high than this one, but barely, on pretty much on wick. It's more like a rejection at the same point as here. So a move to 34K is still the most likely scenario in my opinion there. And that could very well align with some escalation on the Russian-Ukraine front, stock markets dumping, taking Bitcoin with it. The move down would be another 18%, so it's quite an average pullback again. Would make the perfect double bottom on these daily two harmonics, and before bouncing further up and recovering like crazy. Yeah, I think this is still the most likely scenario. So I'll keep this gut feeling drawing on there until it's been invalidated or proven, just for fun. BTC dominance, in my opinion, looks a bit topping out. There's a bit of space to the upside. Like, how much space are we talking about? I think there's like 3 to 5% space to the upside, probably to these levels here. It would surprise me if we have a really big move up or down at this moment in time. Obviously, when stock markets plunge, Bitcoin dominance will rise, because the alts will get completely destroyed, much more destroyed than Bitcoin will. But if we manage to hold our ground for another, let's say this week, then I think we could get some altcoin runs, and we'll probably take a pullback on the Bitcoin dominance. So I think then the alts have like 7% more growth potential than Bitcoin at the moment. We are on count 6 for daily, 7, 8, 9. That would bring us to Thursday, Friday. If this week manages to stay quiet, we could get a bit of a run in alts. Just quickly looking at the general status of the alts is. Sometimes it just doesn't hide those. I usually hide these big ones. BUSD. So overall, some alts are in a very minor green, like not even 1%. It's barely nothing. Some recent gainers like Zero and Theta having their pullback. Meme coins are completely getting destroyed. So it's pretty much up and down on that account. Bitcoin dominance, that's where we were. This week stays quiet. We could get some nice potential alt trades going on there. But it's scary, because Wednesday is the Fed. That's plannable. But if the Russia makes their move, or US reacts weirdly, or another country, then you get an instant reaction that you don't see coming in the charts pretty much. So be ready for a wild ride if that happens. I constantly having my short orders on several levels and move them around constantly. But I constantly have on my big wallet some sell orders, some shorts, in case we plunge down quickly. In terms to Bitcoin, we're still in this mega structure. I think we will be there for a while until if there's a breakout or breakdown. So far, we're in the low end now. So Bitcoin is outperforming Ethereum for quite a while now. So interesting to follow, but at the moment it's no trades in there. No big change in longs and shorts. Market cap still okay-ish. We broke it. We backtesting the breakout line pretty much exactly at the moment. So the question is, do we get a bounce or do we drop a long way down? 1.2 trillion, 1.45 maybe, are the down targets on that. So that's pretty nasty if we break. And then you're talking about 25, what was it? 20 to 35% drop overall. So let's hope this level holds. We broke, we backtesting the breakout level. Hopefully we get a bounce. But it really completely depends on the macro. It depends on Fed, and it depends on Russia, Ukraine. That circle, the fundamental charts. Quickly looking back to the chart we started with, my famous laser show here. The zone from previous week, perfectly still in that zone. The apex is closing in. So tomorrow, Wednesday, would be a likely breakout point. I think Wednesday would be the most logical day to pick a side. Are we moving up towards it 45K-ish? Or are we going to lose 41K? If you lose 41K, we pretty much go to 37 and well, yeah, pretty much 37-ish as the first stop. And then if my other chart is correct, we will land at 34K-ish. And really don't see, with the current macroeconomic situation, it would be awesome to see Bitcoin completely decouple from the stock markets going down and Bitcoin going up, that it's actually finally becoming the hedge against geopolitical tensions and inflation that it's designed to be, and that I'm very positive it will be one day, but not today yet. But it's a guess. Hopefully I'm pleasantly surprised, but usually I'm not. So we're in this zone, breaking down 41K, and it's 37, 34. 45K is our target to break. If we really break 45K, we'll probably see 50K in the blink of an eye. So let's see what happens, but we're in a pretty tradable range. If you would trade it, I got like 41 to break here, because I do want a bit of margin to the downside, at least for me. I would like to see a break of 41, backtest 41, and then we go down. Or if we are happy folks, break 43, probably hit 44 almost. Back there's 43, and then so if we get a straight up or straight down, I'm not going to trade it. I really want to see either huge bloody volume or a proper back test of this 31, 43 zone. Shorter time frame, yeah, pretty much sideways. Weekend, even today, is sideways. Volume is picking up again. What's expected on a Monday. The weekend was bloody boring. Just hovered between CME close and the 42K support. But it's really, really squeezed. I think it's just everybody's holding their breath until either the Fed creates or ruins a party or the Russians do. Just waiting to see what happened first. So I got my shorts ready, I got my longs ready. I have my plan. I know what confirmations I'm looking for. In the meantime, just have to deal with the current market. Yeah, don't forget that EU is so dependent on Russia's gas. It does not give me a happy feeling. And this pretty much says it all. If they invade, the global stock market could be in for a rough ride. Because we had these tensions in the past, but it was a completely different macroeconomical landscape at those times. So just opening one more chart. Of course, that's the hedge. No, not that one. Old overview. Let's skip to the daily. Trading economics, all sources, please. So you can trade silver, you can trade gold, but you got the silver trust, and that's like silver on steroids. If silver does well, this does much better. If silver does bad, this does much worse. So it's like a sneaky way to almost leverage trade silver. And if you take a look at the chart, there you're in a clear consolidation move here. The trend line there is moving up. I think silver is industrial usage is growing and growing every day with electric cars and stuff like that. And the gold silver ratio is very nice for the part of silver at the moment. So I got some good feelings about potentially silver if the market crashes. If the market doesn't crash and this goes down, then my gains in my Bitcoin value will easily offset this. But if the market goes down, this could take a very nice leg up. But this has been way up here, so it has the potential to double if it really goes AWOL on us, like in the 11 recession, or at least the crisis in 11. Silver took a really big leap up, and it could really happen again. Because look what you did. I'm just gonna move some noise. You had a huge retrace, and it's probably an 886 by the quick looks of these. Yeah, See, at 6 retrace, you bounce, you hit your deep spring, you bounced off the spring. And now you're consolidating sideways, forming a double bottom on the weekly chart. And you're just waiting, double bottom, higher low, and it's just waiting to break that W forming pattern here. It's just waiting to go. So that looks really good. And the same goes for the gold minus ETF. It's also like gold on steroids. It's pretty much doing the same. So it had a really nice dip. That was in the COVID crash. We had a 618 retrace. We double bottoming. We're trying to bounce now. 10 minutes left in the Zoom meeting. So these look like perfect entries for me. We got harmonics also supporting that whole situation. So I took a nice hedge on FTX, where you can just trade by the tokenized version that follows the real ETF move. Just a small hedge from my side. It's like pretty much a win-win. If this stuff goes down quickly, and these will shoot up, and I will catch that move. If these go down, it means the economical situation is good, and then Bitcoin will go up in price and offset those small losses easily. Anyway, that's it for this week. Tomorrow I'll be zooming about some new indicator stuff that you've been seeing. Market, the trend profit was the final name. So I'll get back to you on that tomorrow. All right, thanks for watching and see you later.